Good evening, dear students. I welcome you on behalf of ACCA and SCAN School of Accountancy, Islamabad. I hope everyone is doing fine and geared up for today's session. Let me give you a brief review of previous two sessions that we had. In the first session, we were looking after the exam technique, the do's and the don'ts, the do's that are going to increase our chances to pass the exam, and the don'ts that are not really welcomed by the examiner and which may lead to the failure of examination. Further, the focus was to master the skill of time management. If we are able to manage the time allocated against each mark in every question, we will be in a position to do 100 marks of the paper. That is actually the case for many students who score the pass grade. If you are not attempting 100% of your exam, it is very difficult to get the pass grades, as there are fewer chances since you have not attempted 100%. So the idea is you have mastered in managing your time so that you can complete your exam well on time, and if there is some problem or there is some cutting done in your exam, you could revisit it comfortably. Another point that was of prime importance was discussed as, while typing, in contrast to writing, if we write something wrong, we can cut it. And when we revisit it, we see that we have wasted time on writing and cutting it. Well, while typing, we just use the backspace button, and we do not realize how much time we use to type and erase. And this is potentially using our time without any notice. So you have to be very careful while typing. And the key here is that you don't rush into typing your answer until and unless you have perfectly understood the requirement and you have planned your answer accordingly. If you have planned your answer, you won't be writing the stuff that is not required or that stuff that you will have to erase after writing. So before writing, you have to think. Once you are comfortable that this is the answer, I am clear in my mind, rethink. Eliminate the free words that are not required. Your answer should be crisp and crunch so that the examiner gets impressed with your personality being reflected in the examination. Please note, you won't be there explaining the examiner what was in your mind while answering that question. Whatever you have written in the exam is going to be depicted as your personality, and at the level of ATX, the examiner is looking for a person who is no more a tax junior or a tax intern. They are looking for a person who is a tax manager or a tax partner or a senior manager in some company dealing with the affairs of the company with some professional firm or some professional enterprise. So whatever you write will be depicted as your personality, and you have to be very sure about what you write, because this can either go to a pass grade or this may lead to a fail grade depending upon what you have written. Academically, we have discussed few topics as suggested by the students. and I will be welcoming the questions of yours in the question tab. You may write any topic you want me to cover, any specific question from the kit you want me to cover, or any specific area you want me to target. I will be targeting it in the future sessions. There is no restriction for you to suggest if any topic you are not comfortable with is required to be discussed. It will be discussed for sure. Yesterday's session was based upon capital allowances and basis periods, along with a touch of trading losses. I hope the concept of basis period and capital allowances is pretty much clear for you guys. If still there is any problem, you can drop your question in the question tab. I would urge you people to go to the kit and attempt some questions relating to basis periods, capital allowances, trading profits, so that you could see if you are comfortable with the topic or not. The agenda for today, as discussed, okay, opening the question tab. If anybody sends me the question, plus I could see, okay, there it is. Okay, so if there are any queries you want me to specifically focus, you can drop it in the questions tab. Today, we will be discussing some facts about pension. As somebody asked me to elaborate annual allowance charge, I will be giving a brief background of pensions, why the pensions are created, what are the reasons for creation of the pensions, and what is the benefit for the HMRC for having pensions in place, plus some specific attention to annual allowance charge, plus some aspects of value added tax. Apart from that, maybe if we are left with some time, we will be covering the terminal loss relief as requested, with a practice question, a smaller question, but a question giving you a meaningful insight. So let's kickstart today's session with the question we left yesterday. I will be going back to the question. I told you how to read out the question. What is the WhatsApp group link? There is no group created yet. I will see if I could create a group. I have sent my WhatsApp number to the students. If there is anything you want me to ask, you can ask me there. Okay. So we were doing this question, Thomas. So please form a WhatsApp group. Okay, Kamran, let me get the messages from the students who are looking for a WhatsApp group, and I will be positively making it tomorrow before the start of the session, so that if there are any queries you want me to ask till the webinar goes on, I will be dealing with them. And even if after the webinar, after the conclusion of the webinar, you want anything related to ATX, I will be helping you guys out. That is not a problem at all. Now, going back to our question, this is a March 2020 attempt question. Thomas, we went through it. We will be starting it all over again. Thomas requires advice on the tax implication of commencing trade, the choice of accounting date for his business, and whether or not to register voluntarily for value-added tax purpose. Ines, his wife, requires advice on the tax implication of selling shares in respect of which relief has been obtained under EIS scheme. Now, I will be doing question on a very elaborative base, I will be covering each topic that the question may touch, and I will be covering the details that are given here, but they are not required to be the part of your answer. So if I analyze this first paragraph, it is very much clear that Thomas is a guy 32. Question number 32 in Kaplan kit, Eric. Okay, I have noted this with me. We will be doing it if we get time today, or I will see the topic with which it relates, and I will be covering this topic. No worries at all, Tommy. No problems at all. Okay, so if we look at this paragraph is telling there is a sole trader, Thomas, who is asking for the tax advice as he is going to commence some trade. So after having comfortability with basis periods, it is very much obvious that he's a sole trader and he will be making basis periods since this is the start of his business. And when he's making basis periods, there might be some overlap profits. There might be the choice he has to make between certain accounting dates, that which one is favoring him for the payment of tax. So these will be the considerations for this person who is going to start the trade. Can anybody tell me that we make basis periods in case of corporation tax? I'm waiting for the answer. Is Ravi there? Can anybody tell me? The question, Ravi, here is, do we make basis periods in corporation? And if we are not making any, no, okay. Please allow me till tomorrow to make the WhatsApp group. I have received so many requests for the WhatsApp group. I will be making that for sure. Everyone is asking me. I have brought my number. Please drop me a text so that I have the numbers of each of you so that I could make a WhatsApp group. And kindly bear with me till tomorrow. I will positively making it for sure. Please don't worry about that. And let's go back to the session because we need to. You just drop me a text on my number as I have mentioned. Let's get back. Let's get back to the session. And Ravi, you have answered me no. Yes, because we are not making any basis periods for the corporation tax, since the corporation tax is paid as per the accounting period. It is already agreed in the legislation of tax that a corporation will be paying its tax as per the accounting period. So the books of accounts are already prepared as per the accounting period. There is no difference between the tax year and the accounting period, so no basis periods are made for the corporations. Only the basis periods are made for the sole traders because they have the choice to select their accounting date, and if they select the accounting date in line with the tax year end, you are not preparing any basis period. But if it is different from the tax year end, we are preparing the basis period. This was the discussion. Okay, now having considered Thomas, we also are being asked in the question that if he could voluntarily register for value added tax purposes. So here we will be discussing about the benefits of voluntary registration, with value added tax, and what are the possible implications that could arise in the case of Thomas. The other person in the question is Ines, his wife, who is requiring advice on the tax implications of selling of shares in which relief has been obtained under EI scheme. Now, this is one very critical point that is already mentioned, that is giving you a hint about the answer of this question, that Ines, his wife, requires the advice on the tax implication on selling shares in respect of which relief has been obtained under EIS scheme. It means that his wife has already obtained certain relief that we will be finding out later in the question. That relief is going to be revisited since these shares are being sold. Maybe the relief is going to be withdrawn, maybe the relief will remain there. This is what we have to discover. So the opening paragraph or the introduction of this question is pretty self-explanatory, and this is explaining you a lot of things. But since we are sitting in an examination where we have 3 hours to complete all the questions, and this question is effectively of 20 marks, we won't be spending a lot of time. Since we are practicing it, that is why I am elaborating each of the line. But when you are focused, you are not going to be reading it the way I have read it, or you are not going to apply your mind the way I have applied, because everybody sitting in the examination will have some tax knowledge, and your mind will be running away with this particular mindset that, oh, this might be the case, oh, this might be the case, oh, this might be the case. You have to hold all your thoughts for a while until and unless you go to the requirement. Once you read out the requirement, then you will be very much clear about what things you need to concentrate on. Okay, I will straight away jump to the requirement since this will be guiding me. Number A requirement says, on the assumption that Thomas prepares his first set of accounts to 31st March 2020, explain with supporting calculations the difference in the total amount of tax payable by him for tax year 1920 as a result of the profit on the sales of sporting equipment being treated as trading income rather than chargeable gains. Okay, now we have to dissect this requirement. They say we are going to assume that Thomas prepares his first set of accounts to 31st March 2020. So 31st March 2020 will be the accounting date for this person. They are saying the command word is explain. We discussed in pretty much detail, that if the command says explain, then you have to explain. But it says you have to explain with the supporting calculation. So you are not at all going to ignore the potential calculations that could be featuring here. So we will be explaining, but we will be using a little calculations that can be of use. And what we are going to explain with calculations is the difference in the total income of tax payable for the tax year 1920 as a result of profit on the sale of sporting equipment being treated as a trading income. If he carries on as a trader and treats it as trading income, what is going to be the potential tax? And if he uses it as chargeable gain, what is the potential tax? So let's go back to the question and see how the supporting thing is working. Sporting equipment is being sold. Thomas is a UK resident and domiciled, uses his capital gains annual exempt amount every year. Okay. Dividends of 2000 every year. I have explained all the details about this in the yesterday session. I will be quickly jumping on the relevant details so that we could solve the question. I really want to solve two questions today, along with covering of pensions and terminal loss relief. So I will be moving a little quick. And if there are any questions, again, I would say you will be very much welcome to write it into the question box. There are no worries at all. Okay. So Thomas started selling items of sporting equipment from his collection during tax year 20 1819, HMRC agreed that these sales should be subject to CGT in 2018/19. In April 19, Thomas started purchasing and selling more items of sporting equipment such that HMRC said he will be regarded as trading with effect from 6th April 2019. Thomas will not be required to register for value added for foreseeable future. Thomas will, however, consider registering voluntarily. This might link with the second requirement. And what are the expected trading results? Thomas is considering either the 31st March or 30th April for the end of his business. Thomas estimates his total income less expenditure for 12 months for the period of March will be 11,500. Each item of the equipment is purchased and sold for no more than 1,000. All of the costs he incurs are deductible. For tax purposes, Thomas expects his profits to increase steadily after 1st April 2020. So each line is meaningful. Each line is having some relevance to the requirement. Now the requirement has asked me to explain what would be the liability or what would be the tax payable if this sporting equipment is treated to be sold by a person carrying out trade or sold out by a person as a capital gain. Capital gain part is pretty simple. You could see it says that any item is sold for no more than 1,000. This refer and the supporting sporting equipment. Can anybody explain the supporting equipment falls in which categories for capital gains? Anyone? Fawad, I believe you are there. Ravi, can you please answer? Ehtisham, Abimbola, there are many people who are continuing from the first session. I would request you to please answer. The item being sold out for no more than 1,000 pounds falls in which category for capital gains? Yes, it's a chattel because it's a sporting equipment. Sporting equipment can never be intangible. It will be tangible. It will be movable. So we could say simply that this falls in the category of chattel. So if we say that if we treat it as chattel, then what would be the case? The chattels being purchased and sold for less than 6,000 pounds. The chattels being purchased and sold for less than 6,000 pounds does not raise to any implication of CGT. They are simply exempt from CGT. Yes, rightly said Ravi. There will be no CGT. Okay, let's quickly go through the rules of chattels so that we could have a refresher session of that. So if somebody could tell me if we sell out a chattel having cost and sale proceeds for more than 6,000, then what is the treatment? We are selling out a chattel whose sale proceeds and cost is more than 6,000. Okay, Fawad, I believe the exemption is for the chattels that are being sold out and purchased for less than 6,000. And for the question I asked, it is chargeable as normal CGT computation. Yes, CGT will be charged. So you will be charged CGT at 20%. Okay. If more than, okay, very good, very good. I am happy that you are all showing the engagement. That is very, very welcome. Okay. So if the cost is less than 6,000 and selling proceeds are more than 6,000, what do we do? Can anybody tell me if the cost is more than 6,000? Sorry. Okay, if the cost is more than 6,000 and selling proceeds are less than 6,000, then what do we do? But it is chargeable, but we deem the selling proceeds as 6,000. Kindly note that where we are selling chattels having cost more than 6,000 but selling proceeds less than 6,000, we deem the selling proceeds as 6,000. This rule is limiting the loss, since in one case CGT has been exempted where the cost and selling proceeds are both less than 6,000. So HMRC has reserved you to capitalize on more amount of the loss. Here they are limiting the loss by deeming your sale proceeds to be 6,000, limiting the loss. Okay, and the last thing we could say is if the selling proceeds are more than 6,000 and the cost is less than 6,000, then what do we do? Yes, definitely. These are all chattels, Ravi. Anything that is tangible and movable, it is chattel. There are different rules for chattel. Okay, let me just write it here for you people, so that number one rule is chattel sold and purchased for less than 6,000. You everybody told, and they were clear about it. It's exempt. Okay. In the other case, chattel sold and purchased for more than 6,000, they are charged in normal way. Third is if the chattel sold for less than 6,000 and purchased for more than 6,000, selling proceeds are deemed to be 6,000. This is what I'm talking about. And when we deem selling proceeds as 6,000, so consider an example where a chattel is sold for 5,000 and its cost was 9,000. So you will be treating the selling proceeds as 6,000. In original case, the loss would have been 4,000, but when you treat it as 6,000, the loss would be limited from 4,000 to 3,000, limiting your loss. And the last but not the least, if the chattel sold for more than 6,000 and purchased for less than 6,000, then you take lower of normal CGT calculation and number two, marginal relief. You calculate it by 5 divided by 3 selling proceeds minus 6,000. So any from both of these computations, the answer with the lesser amount will be treated as your relevant answer. I hope there is no problems in chattel now. Okay, we are going to the solution. We have discussed if it is treated as a capital gain, as a capital in capital terms, there would be no tax. But if it is treated as a trader, a sole trader, he will be definitely, if no tax is being paid, he will be paying CNICs. He will be paying NICs. NICs relevant is the class 4 NIC, number one. Number two is the class 2 NIC. In this case, I've written you the answer. As Thomas is carrying out a trade of selling sporting equipment, the following liability will be arise in case of being treated as an income tax thing. National insurance contribution, the class 2 NIC, we know that there are a number of weeks, always 52. It is mentioned if it is otherwise, and 2.95 is the fixed rate. So 153 pounds will be the fixed NIC that we all know. Then the other one is class 4 NIC. And how do we calculate? There is a basic nil rate band, you could say, till 9500, and the question has specifically mentioned that after all the deductible expenses, his trading profits are 11500. So 11500 minus the nil rate band for this into 9% equals 180. So the total tax payable here will be, the NIC is 153 plus 180, that is 333. So this is the amount of tax that he needs to pay if he operates as a sole trader for this particular transaction. But if it is treated as a capital disposal, I have written it for you that there would be no capital gain tax to be paid, as they are chattels with the cost and proceeds both less than 6,000. So it is exempt from the tax. The difference in the total tax which will be payable by Thomas for 2019 is the increase of 333. He says that he is not going to treat it as a capital transaction. He wants to treat it as a trading income thing. So if he treats as this as the trading thing, he will be paying an additional tax of 333 pounds, since the additional NICs will be imposed. Any questions till now? Okay, I have a question relating to NICs. What is NIC? Is it an additional tax? Yes, it is 3.05. Thank you, Adisham, for the correction. Okay. So tell me, what is NIC? Is it an additional tax or what? It is an insurance. Why it is given? For the social security benefits. In case of any problem, you will be availing, you will be entitled to all the social security benefits if you are paying the NIC. So basic point to note about NICs is that it is an additional tax imposed by the HMRC on a person specified by HMRC. If it is being imposed on an employer, it is the primary responsibility of the employer to pay that NIC. For instance, in case of employment, we have seen that employers are paying NIC for having employees. We see that there are cases where there is class 1 secondary and class 1 ANIC, where the employer is paying the NICs on the behalf of employee, and we see that the employee is being benefited. But in this case, it is very much obvious, and it should be known to each and every student, that this is not something extraordinary being done by the employer for the employee. This is paid by the employer for enjoying the status of having the employees. This is an additional tax being imposed on the employer for having employees, not any okay, I guess this is complete from my side in this case. If there is any problem, you can ask me. Okay, how we know Sir, class 2 and class 4 will be impacted in each case. It is very much clear. See, you have to develop this mindset in of yours, that if the person was not trading initially, and now he is trading, so a trader for himself is going to pay two NICs. That is class 2 NIC and class 4 NIC. It is obvious. But if it would have been mentioned that he is having employees, it would be probable that we included the class 4 employer NICs as well in this case. Okay, I believe I have created much awareness about this topic while solving out this question. If still there is any problem, you can always ask me. So the 5 marks are secured. You could see that only 3 to 4 lines or 5 lines are enough. With minimal of the calculations, I have explained what is going to be the impact if the capital transaction is not treated as a capital transaction, but it is treated as trading profit. Okay, so we go to the second requirement. It is a very classic case for the understanding of the choice of the accounting date for any trader, and it relates to the basis period that we have done yesterday. It says identify Thomas basis period for the tax year 2021 if he adopts year and date 31st March, okay, or 30th April, and state two advantages for Thomas for adopting 30th April as his year end. Again, this is for 5 marks. Now, look at this question. What the question is saying you? Question is saying you that if you adopt 31st March 2021 or you adopt 30th April 2020, there are two dates that are given to you that you could adopt. And he says, if you adopt 30th April, there will be two tax advantages that Thomas will have. So the question again is giving you the hint that you will be benefited if you adopt 30th April as your accounting date. So what will be the benefits? Can anybody tell me? First of all, it says identify Thomas basis period for 2021. It is very simple. The first basis period will be 12 month ending to 31st March 2021 as he has mentioned, and the other one will be you could see if it's 30th April, then it could be 12 months ending 30th April 2020. They are easily being identified. Now, what is the benefit? The answer is written for you. The income tax liability for the tax year 2021 will be due for payment for by 31st January 2022 as per self-assessment rules. Adopting a 30th April year end maximizes the interval between earning profit and paying the tax on those profit. If 30th April is the year end, in first year rule, you will be ending your accounts to 5th April. Then you will be making another basis period. So this is going to give you enough time. This will be giving you enough break between the payment of the tax and the actual earning of the profit. So this is going to be, the profits will be taxed twice as they will be lower profits. Yes, 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 you're right. So the first advantage by adopting 30th April will be there will be an extended time between the actual earning of the profit and the payment of tax on those profits. The second in this particular case could be a 30th April year end is financially beneficial for Thomas as the profits for his business are expected to rise each year. It has mentioned in the question that the profits are going to rise each year. So the smaller period, lesser amount of the overlap profits. This will be as said by Evelyn. And secondly, If the basis period of 30th April rather than 31st March 2021, it will result in an earlier period of profit and therefore a lower level of profits being taxed. Initially, the lower level of profits will be taxed. This is number one. Number two, when the profits will be rising, you will be having enough time, or I could say more time in comparison to 31st March for the profits being earned and for the profits being taxed. So if you get more time, you are comfortable doing enough tax planning so that you could have the cash flow advantages, number one, so that you could position yourself better for the betterment of your trade. So 30th April is going to benefit you this way. And in this case, your taxable total profit will be known much earlier for you, which means that you could have more time for planning in respect of, for example, if you want to make any payment on account through self-assessment system, or if you want to make any, if you wish to make any pension contributions, you will have enough time of planning for all these aspects and you may be benefiting. Itsham, it depends upon the case. Okay, I'll explain it again. I just need to finish this. So if there is any problem with this, the advantages for adopting 30th April year end, number one is the profits are lower initially. So overlap profits will be lesser. Secondly, you will have more time to plan since the date of realization of profit and the date of taxation will be having enough time difference. You can be better planning for different things. Okay. Okay, Disham, coming back to your question, if the direct calculation, if it says the direct impact, direct calculation is very easy to do. For instance, if it says that what will be the impact of class 2 NIC, it was not already considered, now they are considering it, you simply apply class 2 NIC, it never depends on anything. But if it says that a person is a high rate taxpayer, you have to pay attention to what I say. If a person is a high rate taxpayer, if a trader is a high rate taxpayer, it means that his profits are more than 37,400. So we are not going to consider 9,500. We don't need to leave 9,500 initially. We could straight away jump to the second part of the calculation. If it says it's a high rate taxpayer, we will simply multiply it to the relevant percentage of the NIC. We won't be doing the full calculation. We will just be multiplying it with the relevant percentage that I believe is 2%. If it says it's a high rate taxpayer. I hope this clarifies the point you asked. Okay, so we are done with the two requirements that are the 10 marks, and I have tried to explain you that what potential things can divert your mindset and can actually consume your time without earning you any marks, and what are the points that are straight away going to be giving you marks if you write them straight away. Okay, the third part is explain two matters which Thomas should consider in deciding whether or not it would be financially beneficial to voluntarily register for value added tax. Can anybody tell me this? They're asking you what are the benefits for voluntarily registering for value added tax. Okay, I will be guiding you on this. If Thomas supplies are VAT registered, recover input VAT, claim input VAT. You are right, but you cannot recover input VAT if the other persons are not VAT registered. Is it so? If you get yourself registered and able to reclaim your input VAT, okay, good. It means that you know the implications. Okay, that's very nice, that's impressive. avoid penalty and late payments. That's very nice again. Thank you very much. Okay. So if Thomas suppliers are VAT registered, Thomas will be charged VAT on his purchases, which he will only be able to reclaim if he is registered for VAT himself. Now consider the situation: if his suppliers are VAT registered and he is not VAT registered, he will be charged VAT, but he will not be able to reclaim that input VAT being paid. This is the number one benefit. He could simply avoid the situation by registering himself. He can always reclaim the input VAT, number one. This is clear, I hope. However, if he purchases from non-VAT registered business or members of the public, he will not suffer any input VAT. So there will be no financial benefit for registering. He is not purchasing from the VAT registered business. So they are not charging him any input VAT. There is no point of registering because there is no financial benefit for the registration. But here, this point raised by Ihtisham Hamid becomes relevant, that if somehow he had to be, if he is passing the limit of the compulsory registration and he forgets to register, if he's already registered, he will be able to avoid the penalty and the late payments. Okay, if Thomas customers are registered for VAT. Now, supplier part is done. Now we are back to the customer part. If Thomas customers are registered for VAT, they will be able to reclaim the VAT charged by Thomas on the equipment. This is number one thing. Again, we have done with the suppliers. Now it says about the customer. If you are registered for VAT, you will be charging your customers VAT. And if they are not VAT registered, they will be not comfortable dealing with you. But if they are VAT registered, they will be comfortable because they could easily reclaim their input VAT. It says, however, if they are not registered, the VAT will represent an additional cost for them and they will move to your competitors, since this is not going to yield them any competitive advantage or any better cost being offered by your side. And eventually, if he wants to stay in the business, he will be taking the burden of all that VAT. If he opts for VAT registration and he does not charge his customers that VAT, he will feel the burden. He will be actually bear the burden of that VAT himself. I hope it is clear for you. Any questions? Okay. Okay, that's nice. Next thing up is the last requirement. Okay, it was pretty simple. It was just for the 3 marks. You could easily have gained 3 marks. It is pretty simple. And till now, 5 plus 5 plus 3, 13 easy marks. Now you could see, if you have the brought forward knowledge from TX examination, you could see everything in this question, everything coming your way is related to TX examination. There is no point yet you have incorporated from the technical areas extended in ATX exam. Do you agree with me? The first question of 5 marks, the expression to explain is different, but the knowledge is the same as in TX examination. Again, in the second part, again, it is the same knowledge that you have already from your TX examination. There is no new technical area here except the explanation part. And the third one, again, this is what you have learned already in TX examination: the benefits of the the benefits of the voluntary registration and the disadvantages of the voluntary registration. So 13 marks appearing in March 2020 examination of ATX are completely covered through TX course. So till now, if you have managed to close your eyes for TX course or syllabus content, you are mistaken. You have to open your eyes and you have to start looking for that course, because this is the exam paper and it is clearly depicting that 13 marks are coming from TX examination. You cannot simply close your eyes to that. In the examiner comments that we covered in the first section, I I have shown you what examiner has said again and again, that the students were unable to display the knowledge gained in TX examination. So the TX examination is very critical and crucial for your pass grade. You cannot simply ignore that. You have to be very much vigilant, and you have to be very much on toes when it comes to the TX course, because all the course of ATX, it is based upon your TX course. I hope it could be a very good wake up call for all of you. Thank you. Now, the last one, somebody asked about EIS. So let's just explore that. Explain the tax implications of INS of her intended sales of Tavira Limited shares on 1st June 2020 and calculate her after tax proceeds from the sale. Again, this is the most common type of question that features in P6 examination, that it specifies what proceeds you have to calculate after tax proceeds. The proceeds are the sale proceeds. You complete the calculation, you get the gain or you get the loss, you adjust it with the proceeds, and that figure is your after tax proceeds. There are a lot of students doing it wrong by taking the cost element here. The cost element is not linked or connected anyways when it says after tax proceeds. After tax proceeds means you have calculated the chargeable gain or the allowable loss. Number one, done. The second thing is the proceeds, the sale proceeds you have. Consider the sale proceeds. Again, take your chargeable gain or allowable loss, you net it off, and you get the after sale proceeds. I hope this is clear, and this is worth 7 marks. Okay, let's go to the description of INS. INS, she is a UK resident and domicile, is a high rate taxpayer. Okay, I go back to the question. Why it's not moving? She's UK resident and domicile. Please zoom little. Okay, sure. INS is a UK resident and domicile. She's a high rate taxpayer. Has made or will make no disposals for CGT purposes other than described below. Okay, the first sale is sale of painting. Ayn sold a painting on 4th July 2017 for proceeds of 196,000. The sale gave rise to the gain of 86,000. So, as I told you in the very first session, that if the calculation is being done, you are not supposed to recalculate it. They have clearly calculated the gain for you. It says the proceeds are 196,000 and it says the gain is 86,000. You are not going to run for finding out the cost. What was the cost? I need to calculate the gain again. No need to that. Okay. There is some issue with the screenshot, so for my convenience, I am zooming it out. I will be zooming it again. Please bear with me on this. And it says that I subscribed for 72,000 shares. I subscribed 72,000 pounds for 20,000 shares of T Limited on October 8, 2017. These shares are qualifying EIS shares, so they are qualifying. It means that any tax credit that can be availed will be availed by Trivia, and in the uh, uh, opening paragraph it says that they have already obtained the EIS benefits if there was any. So this is the key point that relates to the background or the introductory paragraph number one. uh, uh, Give me a second. Okay, I hope you could hear me. Irons elected to defer the maximum possible amount of the gain on the sale of the painting against the purchase of these shares, Heinz obtained EIS relief of 18,600 against her income tax liability for tax year 17-18. The relief is 18,600, and it intends to sell all the shares of T Limited for 95,000 on 1st June 2020. So if these shares are sold, when were they? When the relief was obtained in 17-18, and they are sold for 95,000 on 1st June 2020. If undertaken, the sale would qualify for entrepreneur relief. So the time limit says that if they are sold on this date specified, there may be the reversal of the tax credit that have been already been taken. Okay, I hope this is clear now. Explain the tax implications for Heinz for her intended sale of T Limited shares on 1st June 2020 and calculate her after tax proceeds from this side. Now you could see very conveniently that the gain they showed of certain thing other than these shares is not being asked in the requirement. It is just linked to the rollover or deferral of the gain, and it is provided for that reason. The requirement is clearly asking for the tax implications for Heinz for her intended sales of T Limited shares. So you are not going to uh, develop the workaround for the other disposal. Okay, let's go to the answer. I hope you could see the screen. If the shares in T Limited are sold on 1st June 2020, I will have owned them for less than 3 years. So the 3 years time is not completed. There will be consequences. The basic consequences, the tax credit given will be gone. A chargeable gain of 23,000, 95,000 minus 72,000 will arise on the sale, and the EIS income tax relief obtained, which is already mentioned in the question, when the shares were acquired, will be withdrawn simply. As the shares will be sold at a profit, the full amount of tax credit originally given of 18,600 will be reclaimed by HMRC. In addition, the sale of T Limited shares will result in the gain on the sale of the painting, which was deferred on the acquisition of shares, being bought back into charge. So that thing is going to be chargeable because it was deferred with this. Now it becomes chargeable. The other gain that you have deferred previously becomes chargeable. It is not directly become chargeable. It is becoming chargeable because you are selling out these shares. The gain on this disposal was 86,000, but the maximum amount of gain deferred was restricted to the qualifying expenditure of 72,000. So this was a pretty straightforward question. You are not completing the tenure of 3 years. So simple calculations. The only tricky part here was the tax credit given will be reclaimed by HMRC, and you will be suffering tax on that. Okay, this question is it again in the 7 marks question. Some calculations of rollover relief, that is the business asset disposal relief, uh, business asset replacement disposal relief. You could see this calculation was again previously done in TX and now being examined in ATX. So please do consider TX course contents. They are very crucial for you. Any questions till now, so that I could move on to the next question? Okay, tell me if we move to the next question, or first we take a little hit of pensions or terminal loss. I'm waiting for your comments. Okay. If there is any difficulty in terminal loss, okay. Before moving on to next question, we will be doing a short hit on pensions and a detailed hit on terminal loss. I will be doing one question of terminal loss because it could be it can be well explained through an example. Guys, should we take a break here or we continue working? Okay, great. So the pensions, again, if you could, okay, I'll open a document and I'll start writing it for you. Pensions, basically, if you consider a person who is earning well in his early time, and when he becomes old, he is not being supported by his family for meeting up his medical expenses or something else, he will be straight away dependent upon the government. He will be looking at the government to support that person for his expenses. And if the government starts supporting each and every person who is not able to support themselves, this will be causing a lot of burden on HMRC to support people who are not able to meet their financial needs. Obviously, when you grow older, your financial needs never end. You need the finances. If your offsprings are not bearing your financial needs and you are done spending everything you earn, you will be having nothing at the end and you will be totally dependent on the HMRC. But HMRC cannot be supporting each and every person, because this is going to increase the burden on HMRC, and the funds they have vested for the development of the economy will be wasted on supporting these people. So they had to find an idea, they had to strike something that these people, when young, when earning, could simply save some of their money for the rainy days or for the days when they are done working. So in this case, we have two proposed benefits. Number one, we have types of pension. Number one is, can anybody tell? Occupational pensions. What is the benefit of occupational pension? Can anybody tell? It's a, can anybody tell? Is it exempt? If it is exempt, okay, there is one concept I want to tell. Deduct from salary. Very good, Atisham. Please look. If something is exempt from tax, it is not going to give you any tax deductibility. This is very much important to know. This is very critical to know. If you say this income is exempt, if an equal loss is going to arise from that portion where the income was exempt, there will be no benefit for that loss. So you cannot say, you cannot use this word exempt for such things in P6. You won't get any marks, or you would end up in trouble, because the examiner never wants this non-clarity of concept. So this is not exempt. This is deducted from employment income. Okay. ER, can you explain? Okay. The second one is personal employer. Okay. No, we are not talking about the employer here. We are talking about the employee specifically, for the person who's making the contributions for himself here. And when we say about personal pension contributions, what is the benefit for personal pension contribution? Now, this is a tricky one. Who can answer? There are various benefits for this. Okay, very good. paid net. Okay, very good, very good. So the number one is you pay 80% and get 100% back. Number one, yes, HMRC will contribute 20%. Very nice. This is number one. Number two, it will extend the basic and high rate bands. Okay. What is number three? Very right. It will reduce adjusted net income. Very nice. This was the point I was looking for. Many students miss out on that. Reduces adjusted net income. Very right. Okay. So these are the benefits of the personal pension contribution if they are registered with HMRC. If they are not registered, okay, Tommy, I get it. Very nice. Very nice. Okay. If they are not registered with HMRC, no benefit is going to be given. Okay. Occupational schemes are run by the employer himself or any financial institution on his behalf. And when we talk about the personal pension scheme, it is run by simply the financial institutions who master in this service. Any problem? The people who could contribute here are the employee himself and the employer on his behalf. Is it so? And in this case, the employee himself, the employer on his behalf, or even an unemployed person can contribute to the pensions. I hope this is clear. Okay, this is it. This is the basic structure of pensions we have. Now, we get benefit. The benefits are explained. Benefits are given in line with certain rules that are being placed. Number one, we have to look for is the benefit is given as per higher of 1 UK relevant earnings. Number two, what is ANI? Adjusted net income value. When you calculate, when you are calculating the personal allowance, you calculate adjusted net income, and if adjusted net income is more than £100,000, you reduce the personal allowance available. Basically, the personal allowance is given for the underprivileged people, and the benefit is being taken by every person in the economy of the UK. So by introducing the adjusted net income concept, they are limiting the benefit being wasted, the extra benefit being taken by the privileged people through personal allowance. If it is not clear, Ravi, let me know. I will try to add a question in which we have the calculation of adjusted net income for personal allowance so that it gets clarified. Okay, the other thing is 3600. I need to be a little quick to wind up pensions before we go on to the break. Okay, benefit is given as per the higher of UK relevant earnings and 3600. So what are the UK relevant earnings? UK relevant earnings include the trading income and the employment income and the FHL income. Okay, quickly go through what is FHL. It is furnished holiday letting, right? If it is FHL is furnished holiday letting, they are specifically to the lettings of lettings for the seasonal trips of people, and it has specific conditions to meet to qualify for furnished holiday letting. It is treated as a separate rate. There are capital allowances available against this. It is completely treated as a separate rate other than the rules of property business income, it is treated as a separate trade. It is very much important to know. Sometimes in ATX examination, they ask you for certain reasons to qualify for a property to qualify for furnished holiday lettings. There are, it should be available for 10 days in a season, and among 10 days, it is actually let for 105 days. There is a cap of 155 days of longer term occupation on this. You should be realizing profits out of this. Yes, Evelyn, you are right. Okay. So the annual allowance charge basically comes through this portion. You will be given the benefit from pensions on the higher of UK relevant earnings, trading income, employment income, FHL is included in this, and 3600. I hope this is clear to you people. So for instance, I say a person who has pension contribution equivalent to £50,000 and UK relevant earnings of £45,000. Okay, can anybody tell me how much pension contributions will qualify for benefit? Very nice, 45,000. The amount qualifying for benefit will be 45,000. Please look here. The UK relevant earnings is 45,000. Your pension contributions are 50,000. Your contributions are more than UK relevant earning. It says that the benefit is higher off. You have to look for the higher off. Okay, among these two, the higher off is 45,000. The pension contributions you made are exceeding the limit. So you are not encouraged to exceed the limit. Simply that 5,000 of your pension contributions will not be attracting any tax relief. It will be wasted. Only 45,000 will be given. Are we clear till now? Great. I have another question. I say if your pension contributions are again 50,000 and your UK relevant earnings are 60,000, in this case, how much will be the benefit? Yes, it is restricted. You get. Okay, Wad again, you're very right. The benefit in the second case will be 50,000. I hope everyone is clear for the application of this rule, because the annual allowance charge is based upon the application of this. Okay, great. Okay, great. Thank you. Thank you. Now, this what we have agreed is the benefit will be given on the higher of UK relevant earnings and 3600. In this, we have displayed in these two cases. Now, I say that there is something we call as annual allowance. Annual allowance is what? It's a overriding limit. It's an overriding limit. You know what an overriding limit is? Can anybody tell? Okay, no, no worries at all. Overriding limit is that it remains effective. I will display why we say that it is an overriding limit. For the current year, the annual allowance is 40,000. It says that you cannot contribute. Okay, you can contribute more than 40,000, but the benefit on the pension contributions in excess of 40,000 will not be given. The benefit till 40,000 contributions will be given. So if I contrast this 40,000 with any of the above case, I am assuming that I'm considering it with 45,000. Please tell me if you are with me on the concept I am trying to make. We say that there is a person who has done the pension contributions of 50,000, whose UK relevant earning is 40,000, and the annual allowance overriding limit is 40,000 pounds for the year. Now, as per the UK relevant earnings, the amount qualifying for the benefit will be 45,000. Are we clear till this? Okay. But the annual allowance says that the above rule allowing you the benefit of 45,000 is not as per this rule. So there is a contradiction between these two rules. The UK relevant earning says that you can benefit on 45,000, but the annual allowance says you can benefit on 40,000. The HMRC has deliberately placed these rules. What they want from you is you follow three steps. Number one, you calculate the amount of contributions qualifying for benefit through UK relevant earnings rule. In the above case, if you could see in my screen, you have taken 45,000 as qualifying amount. Okay, I hope we are clear till now. In the second point, we say that calculate the amount of contributions attracting benefit above the annual allowance. Okay, so what is the amount of annual allowance? 45,000 with the benefits and 40,000 was the annual allowance. So in this case, the amount in excess are 5,000 pounds. So in the third step, you simply take the excess amount, that is, we have calculated 5,000 pounds as chargeable as annual allowance charge under non-savings income. So now one rule has given you the benefit, you have taken the benefit, no worries, benefit taken. In the other case, you have taken the amount out that is taken, that has taken the additional benefit, and you are adding that additional amount as annual allowance charge under your non-saving income, that is your earned income. This will be taxed. This will be taxed, and the benefit taken will be withdrawn by HMRC. Okay, I hope you are clear on this now. If there is any problem, please ask me. I'm here to explain it again. Okay, I consider you have understood the concept. Ravi, you were worrying about the annual allowance charge. I hope that annual allowance charge is clear, that the annual allowance charge arises on the amount that have qualified for the benefit through UK relevant earnings rule in excess of annual allowance. That amount is added to your under your non-saving incomes, where it is taxed again, and the benefit given originally has been withdrawn through this calculation. Annual allowance is 40,000 every year. This can be carried forward. The amount that is not used in any particular year can be carried forward, and the carry forward needs you to be the opted member of the pension scheme by HMRC. If you do not opt for the pension schemes for any particular year, there will be no carrying forward of that year being allowed. So for being allowed in that case, you have to opt for being registered, for being opted to the pension schemes. For annual allowance to carry forward, you have to opt for the pension schemes. This is number one. And when you carry forward the annual allowance, you use the annual allowance of the current year on priority. And maximum years that it can be carried forward is 3 years. I hope it is clear. If there is any problem, you are welcome to ask. Okay, I believe this session has been for more than an hour and a half. So let's have a short break. Can you scroll up, please? Yes, sure, Ravi. If you want, I can share these handouts with you. That is not a problem. Okay, I will be sharing it. Okay, guys, let's have a break. We will be resuming a session in 15-20 minutes. And till then, I would request you to please freshen up and we will try to conclude the terminal losses and the question I shared yesterday so that we have this session concentrating on some questions and some topics as well. Further, I would be requesting you to type the topics that you want me to cover in tomorrow's session so that the session is actually beneficial for you. Okay, Evelyn. Okay, I've shared it. Okay, guys, see you at 10:20. Thank you. Evelyn, I have sent it. Okay, guys, see you at 10:20. Okay, guys, are we back? Okay, I'll be waiting for next 2-3 minutes. Okay, guys, before moving on to the question, as requested, let's conclude terminal loss first. We will be doing a question for terminal loss as well. I hope everybody is back, and let's conclude this terminal loss thing. Okay. What is a terminal loss? If anybody could answer me. We say that loss of final 12 months of trade is called terminal loss. So the trade is ceasing in this case, and these are the final 12 months of the trade. The business is going to cease, and the loss incurred at the end of the business, and the loss incurred at the end of the business is generally not at not in combination termed as terminal loss, but we say that the loss of final 12 months of trade is called the terminal loss. So any problems? Okay. So while doing this, while attempting the question of the terminal loss, or while trying to understand what terminal loss is, once you identify the final 12 months of trade, and you could simply do certain steps to find out the terminal loss. Actually, the treatment for this is we set it off against total previous 3 tax years. Okay. So you guys with me? You're back from the break? Just want to make sure that I don't move on without all of you being attentive, as any point missed on this will limit the scope of understanding this. Okay, I assume that everybody is here. So any loss incurred in the final 12 months of trade is called terminal loss. The treatment of it is we set it off against the trading income of previous tax years. When we set off against the previous tax year, it is obvious that tax refunds will arise, and whenever tax refund arise, we need to be administratively not burdenized actually. So the FIFO or the LIFO choice, in paper we forget, in paper we in the pressure we forget what was the LIFO basis or the FIFO basis. So the basic trick here is when you are getting the refund of the taxes, specifically in this case, you will be working backwards, and it is very difficult for you to move to the third or the second year initially, but it is very easy to go for the last and first out basis. So that is very simple for you. If you opt for the LIFO basis, the tax refund will be easier. So here you could actually do the terminal loss relief adjustment against the previous 3 years trading income, and you will be getting the tax refunds in this case. Now, this is not the difficult part of the terminal loss relief. In the examination, we do get a question where the closing rules of business basis periods are being applied, and along with them we have to attempt the terminal loss relief as well. So what we will be doing is I'll find a question, I'll find a simple question that could actually help you to understand how this terminal loss relief works. For example, there is a person who was working and whose accounts were prepared from 1st January, I say 2016, till 31st December 2016. Now you could see this is the normal accounting period for this person, and in this case the person had the profits of 6,000. In the next year something has happened. It started like normal. So the 1st January 2017 the business started its new accounting period, and eventually something happened that seized the business on 30th June 2017. 17. So you could see the normal accounting date, as I told you in the previous session, the normal account, yes, LIFO basis, LIFO basis. Okay, so the normal accounting date is not being followed. It was December normally, and now he has ended it on June. So this is the simple thing. You could see that it is not following the normal trend. And in this case, for such business, the loss in this period was £12,000. Now, they say that you have to you have to calculate the terminal loss. Now, how you could calculate the terminal loss? For the very calculation you need to do, step number one is you have to find final 12 months of trade. So can anybody tell me what are the final 12 months of the trade? In this case, the trade is ending on 30th June 2017. So the final 12 months will be starting most probably from 1st July 2016 till 30th June 2017. So the most important point you need to note here is that this 12-month period is having some portion of second last accounting period and some portion of the last accounting period. For your convenience, I am writing it. They are 12 months for you just to know, and they are, you could see, they are 6 months. So here, when we have found the final 12 months of trade, you could easily see that 1st July 2016 till 30th June 2017 is engaging the whole final accounting period and certain months of the second last accounting period. This is the first step you have to do. Second step you have to do is find the final tax year and compute the relevant profit and loss out of this. So what will be the final tax year in this? Can anybody tell me? No, you do 17, 18. Okay. So can you specify the dates from where it will be starting or and where it will be ending? July 16. How come, Evelyn? Can you please elaborate? We're talking about the final tax year. You are telling me, Hafiz Basit, he says that it is 17, 18. Guys, try to I thought it would be whole year. Why it will be the whole year? No, this is the most common mistake that people do. You don't have to look for the whole year. You have to concentrate on what I have written here. In the very first step, what you will be doing is you will be finding the final 12 months of the trade. You have found those final 12 months of the trade. That is it. Now, among those final 12 months, I write here, among the final 12 months. Now it will be more logical for you to understand. I have said that among the final 12 months, find the final tax year and compute its profit and loss. So the final tax year, the tax year always starts on the 6th April. You could see in this, the business is ceasing on 30th June 2017. For a business that is being seized, for the business that is being seized on the date of cessation, that tax year ends for him. So the ending date for that tax year is the 30th June when the business ceases, while the date of the start of the tax year is 6th April earlier that year, that is 6th April 17. So we have computed Out of these 12 months, April till June, April, May, and June, 3 months out of these 12 months. And the relevant thing is that you have to compute its relevant profit and loss. Now, 12,000 is a loss of 6 months, and you have taken 3 months out of these 6 months. How will be the loss computed here? You will be taking the loss of 3 months, that will be 6,000. Okay, got it? Now, among these 12 months, you have taken 3 months here. Now you have to find the residue months. Among these 12 months, 3 months taxed here. Now you have to find the residue months, and the residue months will be the period started on 1st July 2016, and the residue months will be, see, you came till 6th April. You have been taxed from 6th April onwards. Now you will be restricting yourself till 5th April 2017. Okay, any problems? No. Once you have done that, now at every point among these steps, you could see that this 12-month period remains the same. You see, the final 12 months, these are the final 3 months, and 1st July 16 till 30th June 17, these 12 months are going side by side. So what we have done is we have just broken these 12 months into the final tax year and the previous residue months. They may be 6, they may be 9. In this case, they are 9. Now the last step you have to do is you have to segregate the last and second last accounting period in the residue months. Okay, so we have these residue months and we have to segregate the last and the second last accounting period. I hope you guys are understanding it and I am not burdenizing your minds with all of this. So the last accounting period first, I will be sorting out the last accounting period. I'm writing it here for you that this is the last accounting period. You could easily see the last accounting period started on 1st January 17. I write 1st January 2017 till it ended on 30th June, but we have taken 6th April 17 till 30th June 17. So 6th April 17 till 30th June 17 is already being sorted out. We will be moving till 5th April 2017. Now, by sorting this out, we will also be computing the relevant profit. So, 6 months losses were 12,000, 3 months were dealt here. Remaining 3 months will be yielding the loss of 6,000 that we will place here. Any problems till now? Okay. So, the last accounting period done. Now, the months of second last accounting period, they will be from, you could see, 1st July 2017 till 31st December 2016 till 31st December 2016. Okay, so now the 6,000 profit was for 12 months. Now we have taken here the 6 months out of these 12 months. So the profit for this period will be positive 3,000. Now you could see very easily that by combining these, I will be calculating my terminal loss. The terminal loss here will be minus 6,000 of the final tax year minus 6,000 of the months following in the final accounting period plus 3,000 falling in the second last accounting period, yielding me the total of 9,000 pounds as my terminal loss. Yeah, it means that it is giving you an immediate relief of 3,000 and rest of the 9,000 pounds. Yes, Evelyn, you're more than welcome. I will be very happy answering your question. Yeah, I know the loss is 6,000. Yeah. Yes. Okay, Evelyn, complete your question. I'll be answering it. Why 9,000? Okay, Fawad, I will explain it once. How come you have put 6,000? Okay, okay, guys, please, please concentrate. I will be explaining this again. Look, when I combine 1st July 2016 till 30th June 2017, I am taking this whole 6 months period from the last accounting period you agree till now, okay, and 6 months from the second last accounting period. When I have computed my final tax year, I have taken 3 months. If 12,000 is the loss for 6 months, per month loss is 2,000. I have taken 3 months here. I am writing it for you. 3 months. Okay, you could easily see that among these 6 months I have taken 3 months. Now when I found the residue months, in the residue months I have total of 9 months. I have total of 9 months, and among these 9 months I have 6 months of second last period and 3 months of last period. Okay, so among this, can you please see and validate that you're getting the point? From 1st July 2016 till 5th April 2017, you could see the second last accounting period was from 1st Jan 2016 till 31st December 2016, 12 months. I have taken this period from 2016. So July 2016 till December 2016 is the second last accounting period. From 1st January 2017 till 5th April 2017, these are the 3 months of the final tax year. Okay, final period. Now when I have segregated this, last accounting period says, I have already mentioned, from 1st January 2017 till 5th April 2017, per month losses 2,000. We are taken 3 months, so the loss accordingly will be multiplied by 3. It will be 6,000. You getting my point? So now I combine this. I'm just getting I'm just doing it a little bold, so you could see now the whole last accounting period or the last period has been dealt. 12,000 was the total loss, 6,000 in the final tax year, and 6,000 here. Now among 12 months you have dealt with 6 months. The residue 6 months pertain to the 6 months of the second last accounting period, and the second last accounting period is yielding you the profit of 6,000 for 12 months. The per month profit is 500, and you have taken 6 months here. 500 into 6 says positive 3000. So the combined loss of 12,000, I will write it here for you. 12,000 is the loss of the final 12 months, and these 6 months from that period, second last period, is yielding 3,000 profits. So I am adding it up. Yeah, definitely. That's what I'm saying. No, 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 no. How could it be? 1st January 2017 till 5th April will be 12,000. How come, Ehtisham? 12,000 is the loss for 6 months. January, February, March. They are 3 months. 12,000 divided by 6 multiplied by 3 can never be 12,000. It remains 6,000, buddy. This is no mathematics. And this, once mathematically solved, will yield 9,000. Guys, please gear up. If there is any issue, please let me know. Okay, Evelyn, you get it. Fawad, were you able to get it? And Hisham, is this understood? Okay, good. Thankfully, I'm really very happy for you guys putting up the effort and making this webinar, adding into your academic knowledge. I'm very much humbled if you are getting my points, and please can you go again? Okay, Nami, on what point you need me to enlighten? I will do it again. But guys, you have to consider that you have to concentrate, because in these 5 days, okay, how you get 9,000? Okay, I'll explain it again quickly. In these 5 days, we need to cover the maximum. And if you guys are slow to gather what I've been explaining you for 2, 3, 4 times, it will be a little difficult for me to cover more and more and more topics. I really want that every topic that pains you could be sorted out here with the example. For that, you have to gear up a little. I really would encourage again for the topics you want me to cover in the tomorrow session. Meanwhile, I'll help Tommy to understand how we get 9,000. Okay, Tommy, when we say that we are using the terminal loss relief, we are talking about the final 12 months of the trade. Now, in the final 12 months of the trade, we get these 6 months from the final period, whose total loss is 12,000. In these final 12 months, I use 3 months from the second last accounting period. So the second last accounting period had 6,000 of profits for 12 months. When I calculate them for 6 months, they are equal to 3,000. Now, when I cumulate these months, when I combine these months, there is a negative of 12,000 plus there is a positive of 3,000, and when I round it off, when I mathematically solve it, it becomes 9,000. 12,000 negative plus 3,000 profits. The basically you could understand. Thanks, you get it. Okay, okay. Thankfully. So I guess that's the end of the terminal loss. Okay, thank you guys. Thank you so very much for this. One thing I would like to add in the questions, when the terminal loss relief is asked, it is oftenly related to the basis period with the closing year rules. So you have to concentrate how you are going to apply the closing year rules that I've been explaining you in the previous session. So be very careful that you oftenly get a question in which a trader has started. They give you the opening months, some opening years, in those opening years you apply the opening year rules and you calculate the overlap profits. Please listen to it very carefully. You apply the opening year rules and you calculate the overlap profits. Once you are done with that, you start applying the ongoing year rules, and suddenly the question says the business ceased. There is no more operations of the business going on. There is no, so there is, when the business ceases, the business stops, and you know that the overlap profits, the business stops, and you know that the overlap profits are to be settled here. And when you calculate the terminal loss, you have to be very much sure about the calculation of the terminal loss along with the overlap profits without committing any mistake. That will be the key. So a combined question from opening year rules, ongoing year rules, closing year rules along with the terminal loss may feature in your examination, asking you for the relevant explanations. Yes, but so the terminal loss should be carried back in FIFO. Okay, let me just see. I'll confirm it. No worries. Okay. Okay. In one case it is LIFO and in one case it is FIFO. I'll just confirm it. No worries at all. Okay, guys, I would like you to move on the question that I shared with you. The question name is Freya. Are you able to see my screens? My screen? Okay, guys, this question is related to some areas of income tax and some areas of corporation and some residency ties. So we are at almost the closure of the session in coming 15, 20, 30 minutes. I will try to sum up the major things in the question, and we will be attempting it maybe tomorrow. And let's go through the question. The question is a little lengthy, and we need to know how to approach such kind of question. This is a question equivalent to 25 marks, but we did. The question we did earlier was worth 20 marks. So this is a little bigger question than the previous one we attempted. Now, again, I would request you, the topics you want me to cover in tomorrow's session, please drop them in this comment section so that I can plan them for you. And specific questions you want me to do, I will also be doing them for you. Okay. Now, your manager has had a meeting. Remittance basis charge, VAT, ESOP, say that is noted. Let me take the picture of it. We have done the enterprise investment scheme question. I hope some of the aspects are clear, and for the rest of the aspects we will be okay. Okay, see, your manager has had a meeting with Freya, a client of your firm. She has sent you the memorandum she prepared following the meeting and an email detailing the work you are required to do. Now you could see that your manager, can we go through its conditions and order in order for them to apply? Okay, Ravi, don't worry. I'll make some notes in advance and I'll be sharing them so that you could get them in the handout section and I will be explaining them thoroughly, hopefully. Okay, so in this particular question, your manager has had a meeting with your client and she has sent you the memo she prepared following the meeting and an email detailing the work you are required to do. Now, again, settle down a little and try to understand what the question is doing with you. Your manager, after meeting with the client, she sent you the memorandum she prepared from the meeting. So, the memo from the meeting and an email detailing the work you are requested. So, you have two sources. You have to understand that you have two sources. The information, the data will be scattered in the meeting memorandum being prepared by the manager, and the email also will be having some critical information that you will be using to understand this. So you have to highlight the critical information in the memo and in the email while going through the question. How will you do so? You have you have gone through the first introductory paragraph. Now you have to move on to the requirement so that you know what the question is asking you. So the question asks, okay, the question is asking, carry out the work required as requested in email of your manager. The following marks available. There is going to be some sale of business that is worth 13 marks. There is a liability to income tax that is arising and class 4 NIC contributions that is worth 8 marks. We are very much clear that there are two kind of class 4, there are two kind of NICs being applied on a self-employed person and land in Beneda. So this is what you have to do. And the available marks are 13 for the sale of the business that we are going to do in this question. 8 marks for the liability of income tax. Again, it is saying you the liability of the income tax. If there is anything deducted under payee or under the tax deduction at source, we do not need to subtract it and calculate the income tax payable. That step is not going to yield any extra mark, since it clearly says that you have to calculate the income tax liability, not the income tax payable in this case. These points are little but they actually add a lot in your time management thing, so you have to be very much careful about this. Now, going back to the question, they say that carry out the work required as requested in the email of your manager. Okay, the email extract says that the sale of the business is here in the email, but let's go to the question completely and we'll come back to the email. Okay, it says memo extract from your manager dated 7th September 2020. So you have to be very much sure about what date it is and when the things are going to happen and how you are going to account for in them, count them for in different tax years. The idea of reading out this question today is that you could attempt it by yourself at your place and you could highlight the points where you were not able to understand the question or you were wasting your time, so that we could have a thorough discussion tomorrow and we could actually sort out the issues that you accounted for. Okay, but the background says that Freya has been domiciled and resident in the UK more than 30 years and has not spent any single periods of time overseas. So she's consistently living in UK for more than 30 years, no significant periods of time spent overseas. Okay, fair enough. She started trading as an incorporated business in 2012. This is the date 2020. So opening year rules have been prepared. The business will be going on the current year rule basis. That is, the accounting period will be the basis period, and the overlap profits will not yet be settled if there was no change of accounting date. As depicted in the question, there is no change of accounting date in the question. Okay, if you miss out on something I said, you can always drop a question and I'll be repeating myself without any issues. Okay. She has started an unincorporated business in 2012 and has always prepared its accounts till 31st May each year. So the basis period will be prepared accordingly. This is the normal accounting date she follows. Freya's business is her only source of income. So there is no other income, no property business income, no interest income, no employment income. This is the only income that Freya is having. Okay. Sale of Freya's business. Now the business is being sold by Freya. Please zoom little. Yeah, sure. Sale of Freya's business. Freya has received an offer of 2.3 million pounds from an unconnected party for all of the assets of her business. If the offer is accepted, so it says clearly the all the assets of the business there, the business is not going to be sold on piecemeal basis. All the assets will be sold of this business. If the offer is accepted, her only chargeable asset for capital gain tax purpose will be the goodwill and her business premises. So you could see your business premises and the goodwill will be the only things that will be going for the capital gains tax. This might be involving some portion of the capital gains tax being applied and some portion of the income tax. When you say that the capital gain tax will be applied, you should be very much vigilant about any capital gain tax relief applied, specifically the entrepreneur relief, because the examiner in his comments has time and again mentioned that the student completely calculate the chargeable gain or the applicable allowable loss in case of capital gains tax, but they are unable to detect the use, unable to detect and implement the use of entrepreneur relief. So after attending this webinar, I would really want that you people do not miss out on the entrepreneur thing, at least in the questions that require you to apply that. Okay, moving on. The aggregate chargeable gains arising in respect of these assets will be 850,000 pounds. So the aggregate chargeable gains are here. They are already calculated. So offer was 2.3 million pounds and the gain is already calculated for you worth 850,000 pounds for both the goodwill and the business premises. However, once she is no longer working full-time, Freya intends to live in the country of Canada and has asked us to consider whether she would save UK tax if she were to delay the sale of her business until after she left the UK. So the residency criteria here is being asked that if she no longer lives in UK, can she save any taxes if she delays the sale of business until she moves out of UK? So potentially we will be looking out on the residency criteria here while answering this question. I agreed to advise Freya on the following strategy, the strategy devised by your manager. Now see, this memo is detailing some background, is detailing the offers made. She can if she moves overseas and does not return for 4 years, correct? Yeah. Okay, so understand what has been given to you in the question: the background, the offers made, the figures that will be playing a critical role in the calculation, And now she's telling you what she advised Freya on the following strategy. On 31st October 2020, your manager has said Freya that Freya will sell all of the assets on her business to FIM Limited, a UK resident limited company, in exchange for ordinary shares of worth 2.3 million. Freya will own the whole ordinary share capital of FIM Limited. So what is happening here? The consideration will be received in the form of shares. When it is received in the form of shares, will any gain will arise? There is no cash transaction involved. Can there be any gain? If you don't have any cash, how will you pay the CGT out of it? No, there is no chance that there is any gain arising out of it because you don't have any cash. Yes. And on 5th April 2021, Freya and her family will move to Beneda. Okay. 31st October 20, they are doing this deal. On 5th April, they are going to move to Beneda. 30th April 2021, Freya will sell whole of the ordinary share capital of FIM Limited for cash proceeds. So 30th April and 31st October 2021, they are falling in the different tax years. This is an important link. This might be an important link while moving on to the question further. Okay. Freya's ideal scenario. Freya would like to live in Beneda for no more than 3 years. She never wants to live for more than 3 years and for no more than 3 years in Beneda. She would buy a home there and would also retain her home in the UK. So potentially we are going to have some things related to the residential property of her, the principal private residence that she has in UK, and one residence that she is going to have in Beneda. Freya would stay in her UK home for 55 days each year, of which 25 would be working days. She would spend the rest of her time in Beneda. So what she's saying, every tax year 55 days, of which 25 would be working days. Does this thing matter that you are spending days and out of them they are working days? Can anybody answer? I will be waiting in the comments box while I move forward. She would spend her rest of the time in Beneda. Most of the time she's going to spend in Beneda. And Freya does not intend to carry out any work in Beneda. She will be totally, yes, it does. Okay. Freya, husband and children. Please elaborate, Ravi, if you could please. Freya's husband and children would remain in Beneda throughout the 3-year period and would not be resident in the UK. That's great. Freya's husband and children will remain in Beneda throughout the 3-year period. They are not coming back to UK and would not be resident in the UK. This is clear from this scenario. Okay. Now they're talking about some things in unincorporated business. Now, all the information that you feel critical, you could highlight it. Unincorporated business financial information is given here. A single set of accounts will be prepared for the 17-month period ending 31st October 2020. So this is the 17-month period. The budgeted tax adjusted profit for this period before deduction of capital allowance is 94,000. So there might be some calculation of capital allowance that you have to do independently. The writing down values as at 31st May 2019 were main pool 0, cars with the private use 8700. When the car is with the private use and if you dispose it off, you are only going to consider the business portions for the qualification of an allowed expense. Moving on 1st September 2019, Freya purchased plant and machinery for use in her business costing 4200. So this is the plant and machine for use in her business. So it might qualify for WDA at the rate 18%, or it might qualify for AIA if it is available. If the business is ongoing, it will be available. If the business is not ongoing, it won't be available. On 31st October 2020, the plant and machinery used in her business, excluding the motor car, will have a market value of 6,300. Every item will be sold for less than its cost. So when you sell every item for less than its cost, then what will be happening? You will be having balancing allowance, won't be having any balancing charges. Any problems till now about the points we discussed that I feel are relevant, or maybe that I feel I could talk them out? Won't it be a chattel? Less than 6K. It's not less than 6K. It is saying that it is more than 6,000. It is 6,300. Yes, it can be. Okay, Freya will withdraw a motor car. Will withdraw a motor car from business. Yes, it can. It can go either ways. We have to see. We have to see what the scenario is and how we are going to apply it. Yes, it can be a turtle. No issues in that. Freya will withdraw a motor car from the business on 31st September 2020. The car has always been used 65% for business purpose and will have a market value of 11,100, which is less than the car's original cost. So what we will be doing is we will be apportioning it for the business and the private percentages. Freya and FIM Limited will submit a succession election to HMRC. That's cool. There are unrelieved overlap profits from the commencement of the business equivalent to 31,400. Obviously, as I told you, the business is going to cease. When the business will be ceasing, in the closing year rules, we are going to accommodate these 31,400 overlap profits that were arising there. Land and Beneda. Freya's father, Alvaro, moved to the UK and became UK resident on 6 April 2006. He is domiciled in Beneda and has owned a plot of land there for many years. He's considering giving this land to Freya within next 12 months. So the land is going to be sold by his father to Freya within next 12 months. I agreed to advise Freya on whether or not such a gift could result in an inheritance tax liability for her. Alvaro is not well and is unlikely to live for further 7 years. We should therefore assume all the future potentially exempt transfer will become chargeable to IHT. They might become chargeable to IHT, but we cannot under but we cannot simply ignore the use of the taper relief in this case. Because Alvaro makes regular substantial lifetime gifts of assets situated in UK, we should also assume that there will be no nil rate band or annual exemptions available in respect of gift of this land. It says that you don't have to go and find the annual exemptions. Whatever the annual exemption or whatever the nil rate band is, it is being used consistently by Alvaro, the father of Freya. Okay. So this is what the memo has to say. And the question has said that it is not only the memo, it has the email as well that is going to be providing you some important aspects of this conversation between your manager and Freya. The additional information in respect of the country of Beneda is there is no, this is the extract of email now. So you will be combining both the data and then you will be seeing how this question could be addressed for its requirements. There is no capital gains in Beneda, so no worries at all. No DTR is going to be applied. There is no double taxation treaty between UK and Beneda. No capital gain tax. And for the other things, there is no double tax treaty between UK and Beneda. Please carry out the following work. Now she's instructing you that these are the tasks that you have to do in light of the information shared by her through that memo. Okay, for the sale of business, we have seen that 13 marks are pertaining to the sale of business. And what is your manager saying about the sale of business? Calculate the CGT which would be payable by Freya on the sale of her business if she does not incorporate her business but simply sells all her business assets for 2.3 million on October 31st October 2020 to an unconnected purchaser, explain the rate of CGT which would be charged. The rate of CGT which would be charged. This is a very, very, very tricky but easy part for you. The annual exempt amount will not be available to Freya, and she will be the high rate taxpayer in the tax year of sale. Since she is the high rate taxpayer, the applicable rate will be the higher one, and we have to see if the entrepreneur relief is available. In these cases, if the conditions of entrepreneur relief are met, we will be using the tax rate of 10% of entrepreneur on this. Let's see in the further information. So first thing that you are being asked for the sale of business is that you have to calculate the CGT for Freya. Second is explain the CGT implications of the proposed sale of Freya's business. Now, they are not going for that film limited scenario in the first case. First case is you are not going to sell it to the film limited. You're just selling it as a as an independent person without making it into a corporation. So the second case is that you have to explain the CGT implication of the proposed sale of the Freya's business to film limited in exchange of shares worth 2.3 million, where I told you that this is an exchange against the shares. There are no cash element involved. I can confirm that all the conditions necessary for the incorporation relief to apply of this transaction will be satisfied, and that no election will be made to disapply this relief. We will be applying incorporation relief here. On the assumption Freya lives in Canada for 3 years from 5th April 2021 in accordance with the ideal scenario, explain her UK residence status for those 3 years. Now, you have to do what? You have to do the independent of film limited calculation, the CGT calculation. The command word is you have to calculate the CGT. Here you have to explain the CGT implications if you are doing it in the film limited scenario. And on the third say, on the assumption Freya lives in Canada for 3 years from 5th April 2021. What will be in accordance with the ideal scenario as she told you in the memorandum? You have to again explain her UK resident status for those 3 tax years. I have done some preliminary work on Freya's resident status and can confirm that Freya will be neither automatically non-UK resident nor automatically UK resident while she lives in Canada because of her father's domicile. Maybe on the assumptions that Freya is non-UK resident for tax year 2021, explain any changes which would need to be made to Freya's ideal scenario in respect of her time in Canada in order for these to be no UK CGT on the sale of shares on Film Limited. She says that you have to assume that Freya is non-UK resident for 2021, and you have to again explain any changes, the previous scenario, and now on the basis of being non-UK resident, what will be the changes from in comparison to the previous scenario. So three parts asking you to explain, one part asking you to calculate and explain the CGT, the rate of CGT which you will be charging, that you have to explain why you are charging 10% or 20% or 28%, maybe if it is the case of the residential property being a high rate taxpayer. The B part is liabilities to income tax and class 4 NIC. On the assumption Freya sells her business to FIM Limited on 31st October 2020, calculate her liability to income tax and class 4 NIC for her final tax year of trading. See, you have to compute all of it. I can, again, it is in calculate, no explanations required. I can confirm that Freya will not receive any taxable income from FIM Limited. It says only thing you have to consider here is this. Land in Beneda, explain whether or not a gift of the land by Alvaro to Freya at some time in next 12 months could result in a UK inheritance tax. Fairly a straightforward thing, easy 4 marks for you. Now, this question is worth 25 marks. I've taken around 10 to 15 minutes to read out this question and explain the scenarios that may be, and not in reference to the requirement, but just to go through the information, all the points that my mind had with me after reading them, I have tried to explain you. Now, this is for you that you go through this question again and you try to attempt it. We will be attempting it again tomorrow. I won't be reading out the question again tomorrow. We will start moving to the solution. It would be better for you if you have gone through the question and we could simply be highlighting the issues that you face. Guys, I would request you to please share the topics that you want me to do in the tomorrow session. Other than that, I will be doing two questions I have selected for you for tomorrow session. That will be our second last session. And one thing I remember doing was the application of 7-year accumulation period that I will be doing through a question. Now we could call off for a session if you could review the reliefs of CGT or IHT. APR, BPR you're talking about, Ravi? Okay, sure. We could simply go through the reliefs of CGT and IHT, very well traced. Okay. Anything else? Sir, could you please elaborate the term tax implication? Like explain. Okay, I will, Tisham. Explain the term tax implication, like explain and calculate. Okay, if when they say calculate, they are not requiring anything in the form of explanation. They are simply saying it. All those relevant calculations that are used to calculate, you have to do them simply. Don't need to write any explanation to what you are doing. But when it says explain, it could say you explain only, or it could say you explain with the calculations if applicable. So if it says like only explain, you just have to explain all the implications. But if it says explain with supporting calculations, then you have to use the calculations, some smaller calculations, not the full calculations, smaller calculations that would actually explain why we are doing that. I hope your answer is addressed. Evelyn, you say IHT and CGT reliefs and go through a question of each. Okay, so the tomorrow's agenda will be IHT and CGT reliefs, and I will be trying to attempt the question along with you people. And I would request you to tell me for the Friday session as well. I guess corporation tax remains there. If you have any troubles in substantial shareholding exemption, that is an important topic, and withdrawal of investment. We have considered it a little in our first session, but it can be elaborated. So it depends purely upon your will. Since I have seen many of you guys attending the sessions consistently, so this webinar is dedicated to you people. I will be addressing the topics and the questions you will be asking me. I've taken the pictures of the recommendations that you people have sent me, and I will be addressing them. I hope this session was fruitful for you, and you are welcome for any feedbacks. And I hope this helps you in your preparation. The key thing again, you just don't rush into the answer. You go through the requirement. For that WhatsApp group, sir, please share your number. Evelyn, I shared my number, but I am going to share it again in full format: 0092 345 850 3804. You guys are welcome to uh, ask me questions. But for the WhatsApp group, I will be making it. Please don't text me again and again for make it. Just share your numbers. Just write your number and tell me that you're the student of the webinar. I will be making it WhatsApp group, and we can later on be sorting out your problems. So let's call it a day. I hope it was fruitful for you. Thank you very much, and good night, guys.